Friends, now we need to move to the next problem. We can take question number 4 in page number 12.54. Pause the lecture and read the question carefully. Okay. Now we will read the question together. What's given in the question? Trident Toys Limited manufactures a single product and the standard cost system is followed. Standard cost per unit is worked out as under. Okay. Now, materials, what is the standard? 10 kilos at rupees 4 per kg, 40 is the rate. Labor, 8 hours at rupees 8 per hour, 64. Then variable overhead, 8 hours at rupees 3 per hour, it is 24. Then fixed overheads, 8 hours at rupees 3 per hour, it is 24. Then standard profit, it is 56. Okay. Now overheads are allocated on the basis of direct labor hours. In the month of April 2019, there was no difference between the budgeted and actual selling price. There was no difference between the budgeted and actual selling price. There were no opening or closing stock during the period. So these two are some pretty good information. Now other details for the month of April 2019 are as under. Production and sales, budgeted was 2000 but actual was 1800. Direct material, you have information, budgeted 20 kilos at rupees 4 per kg, whereas actual was 20 kilograms at rupees 4 per kg. Direct labor, 16,000 hours at 8 per hour, actual was 14,800 hours at rupees 8 per hour. Variable overhead amount is there, fixed overhead amount is there. Required, reconcile the budgeted and actual profit with the help of variances according to each of the following method. 1. Conventional method, you have to find out all the variances under conventional method, that you have to do the reconciliation of profit. Then relevant cost method, yes, this is one area which we did not do when we did the theory part. Okay, now you have a problem on that. And the relevant cost method, assuming that 1 or A, materials are scarce and restricted to supply of 20,000 kilograms for the period. Labor hours are limited and available hours are only 16,000 hours for the period, and there are no scarce inputs. Now 2, comment on the efficiency and responsibility of the sales manager for not using the scarce resources. Okay. Efficiency and responsibility of the sales manager for not using the scarce resources. Okay, so the first part is pretty very simple part. Then we will do the first part, then we will come to the relevant cost approach. Okay. Sorry. Yeah. Now what do you have to do? You have to start with the traditional variances. So computation of traditional variances. Traditional variances. Okay. Now under that one, which is that material variance. Okay. In material variance, if you see the rates, budgeted rate, it is 4 per kg, actual rate is 4 per kg. So do you think that there will be any price variance? No, there is no price variance because there is no change in the material cost. Okay, so you can write material cost variances. Under that you can write as there is no change in the material cost as per the budget, and what, as per the budget and the actuals, there is no material price variance. There is no material price variance. Okay, so Do you have material usage variance? Yes, the usage is different. Why you say that usage is different? If you see the budgeted information, what was the budgeted amount? It was 20,000 kilo. What was the actual? 20,000 kilo. So can you tell me, is there any usage variance? Both budgeted and actual data, it is 20,000 itself. Is there any budgeted variance? Yes, there is budgeted variance. Why there is budgeted variance? There is difference in the output. Budgeted output was 20,000, whereas actual output is 18,000. This budgeted out materials of 20,000 kilos work for 2,000 units, whereas actual 20,000 kgs were consumed for 18,800 units. So there is usage variance. Is it clear? Okay, so you can write a note. Though the total quantity of material consumed as per the budget and the actuals are same, there is material usage variance. Okay, why? This is because the budget was prepared for 2,000 units of output, whereas the actual consumption details are given for actual output of 1,800 units. Is it clear? Okay, so direct material usage variance is equal to material usage variance is equal to, what is the formula? Standard quantity for actual production minus actual quantity into what? Standard price. Okay, how do you formulate this? What is standard quantity for actual production? What is the standard quantity for standard production? It was 20,000 kg for how many units? 2,000 kgs. Now what is the actual production? It is 1,800. So this will be the standard quantity for actual production minus how much you actually consumed? 20,000. So into what is the standard price? Rupees 4. So that is equal to 20,000 divided by this will be 18,000 minus 20,000 into 4. That will give you how much? 8,000. What is adverse or favorable? It will be adverse because you have consumed more than the standard, so it is adverse. Okay, now come to what? This is material. Now labor cost variances. Labor cost variance. Yes, what do you say? Again, is there any difference in the rate? It is 8 per hour. So there is no labor rate variance. But what about efficiency? Yes, there could be efficiency variance. Okay, so as the labor rate per hour is same for both budget and actuals, there is no labor rate variance. Okay, so labor efficiency variance is equal to standard hours for actual production minus actual hours into what? Standard rate. Okay, so standard hours for actual production, how do you compute that? The standard hours for standard production was 16,000 hours for 2000 units. 16,000 hours for 2000 units. How many units actually produced? 1800 units. Minus what is actual hours? Actual hours is nothing but 14,800. What is SR? SR is 8. So that is nothing but 16 divided by 2 will be 8. 8 into 1800 will be 14,400 minus 14,800 will give you 400. 400 into 8 will be 3,200. Adverse or favorable? It should be adverse because consumed is more. Okay, now next, variable overhead. You don't have any information about the variable overhead. Do you have any information about the, what do you call, variable overhead absorption rates? Yes, variable overhead 8 hours rupees 3 per hour. Okay, 8 hours means it is in the order of the labor hours. Okay, so variable overhead is absorbed on the basis of labor hours. That is, for each labor hour consumed, the standard rate is 3 per hour. Now if you go by that, how many you could have computed? You can do that, no? Okay, so we will write that. Variable overheads. Okay, variable overheads